Let's bring in Ann Sonders, Chief Investment Strategist and Senior VP at Charles Schwab. Ann, it's been quite a powerful rally here.
Yeah.
How much longer can it last? How much farther can it go based on the fundamental news we're getting?
Don't I wish I knew that? The fundamental news is obviously incredibly. But I don't try to time markets in the short term. So I said it with jest, but there's some seriousness behind it too, because I don't think that's how investors should approach investing. Clearly, the economic news has been spectacular. What was interesting, at least today, was watching the move down in the 10-year. And I'm not quite sure what to make of that yet, other than maybe given how strong the news is, maybe the bond market is pricing in peak growth coming sooner than expected. And we're still early in earnings season, but of course the numbers have been gangbusters so far. We've had less than 40 companies report, but 88% have beaten expectations. The percent by which companies have beaten so far is more than 20%, which is well above the kind of mid-single digit norm for that kind of metric, at least pre-pandemic. But we still have a ways to go. And I think it's not just what companies report for the first quarter, but what their outlooks are, particularly for the second quarter, given that that's really when we get into that acceleration mode from a comp perspective, where consensus right now from Refinitiv is for a 55% increase year over year in earnings. And as long as we see that the bar is set low, that acceleration in earnings is doing a lot of the heavy lifting and bringing valuations down, which clearly had been a concern, I think, until recently.
Yeah, I mean, it's sort of hard to understand what to make of the numbers because the comps are also pretty easy from where we were this time last year on sales, on earnings. So when you talk about the bar for outlooks, which is going to be the most important thing, where is it right now? Just explain what companies need to do, which sectors you'll be watching for who can clear that. That will be a tell of whether this market can continue to rally.
Yeah, so the consensus, excluding today's reports, because Refinitiv puts out its consensus data now just on a weekly basis, is for a 25% year-over-year jump in Q1 and a 55% year-over-year jump in Q2. And some of the more cyclically oriented sectors, like financials in particular, is where the expectation is for the highest beat rate. So given the strength in cyclicals since early November when we got the positive Pfizer news, and those being a driver looking ahead into 2021 in terms of really powering that strong year-over-year growth for the overall index, I think that's where the concentration should be. And of course, we've seen a bit of sector rotation recently where you've gone more, I think, to away from that pure cyclical bias back to more of a fundamentally driven, maybe even a quality bias to what's been working. So the leadership patterns have been a little bit different in the past month. But I think from an earnings perspective, those cyclical areas and confirming that strength in the consensus estimates will be key to, I think, sustainability of the move more broadly in the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.